financial markets and real assets are at a tipping point. Let's jump in and take a look at what's going on. Markets started out up today, but they've erased all of the gains down just a little bit here about midday Eastern Standard Time, about 1 o'clock. We'll see how the markets end up today, but I have a feeling that they might end up a little bit on the downside because the Fed's Harker came out and cooled the markets once again. When the Fed talks, the market drops, right? Existing home sales fall to a 10-year low in September. No surprise there with mortgage rates over 7% now. Flat out double what they were before, which basically cuts buying power in half for people and really is affecting sales and values and inventory levels. We'll see how that does because inventory levels are still low, record lows all across the country. There's still bidding wars and properties are still selling in days in some markets. Other markets, you can't give them away. So let's take a look at what the Fed's Harker has to say. And this is very telling here. He said, we are going to keep rates, raising rates for a while. The central bank official said in remarks to a speech in New Jersey, given our frankly disappointing lack of progress curtailing inflation, I expect we will be well above 4% by the end of the year. Well above 4%. There's a lot of people speculating the Fed may stop and pause at the end of the year, but he is saying that that's not the case. He said sometime next year, we are going to stop hiking rates. At that point, I think we should hold at a restrictive rate for a while, let monetary policy do its work, he said. It will take a while for the higher cost of capital to work its way through the economy. After that, if we have to, we can tighten further based on the data. So he's talking about pausing and then continuing to hike. He's not saying pausing and then backing down. The consensus or the opinion of the Fed is they're going to have to continue with restrictive policy well into next year, and that assets are going to have to reprice to get to that level based on current monetary or financial conditions. So they want to see tight financial conditions for some time to come. So let's take a look at the chart, see what's going on. We're watching Bitcoin, and we looked at the other day this area of Bitcoin and that whole time frame of when Bitcoin kind of leveled off in this area and just fizzled out to nothing before that final capitulation before the end of the year. And you know, one of the things that was similar back in 2018 when this happened, this was around that November, October, September, October, November timeframe back in 2018 when the market dropped that 50%, like we talked about in the other video. That was a time when the Fed was tightening. And then let's take a look at the S&P back during that time frame. Here it is right here. So same thing. Here's that September, October, November timeframe dropping to the bottom in 2018. That's when the Fed came out and started raising rates and tightening, but they pivoted because the credit markets froze. This time, the credit markets have not frozen. They've threatened, and there's been a little bit of damage done in the credit markets, but they have not completely broken or frozen. Here is the same thing in the NASDAQ. This is that October, November, December timeframe in the NASDAQ 2018 when the Fed was tightening. Real estate market was cooling off and basically came to a screeching halt back then. And the financial markets started imploding until the Fed pivoted. So you can see this big drop right here when that happened. Let's take a look at what that was. That was about 20%, I believe. Yeah, it was about 23% in traditional markets where they reacted to the Fed's tightening back then, and the markets have already been unwinding ahead of that. So 19% there. And if you look at where we're at right now on the Dow, currently down about 17%, low was right around 22%. So markets are reacting kind of the same way, waiting and testing the Fed, daring the Fed to pivot, and the Fed has not done that yet. So you can see that the way things look right now, it's just been that orderly decline and repricing of financial assets in the markets, relative to where interest rates are and where interest rate policy will be into the future. So right now, that's kind of where we're at. We're waiting for the next Fed meeting, waiting for other risks to potentially raise their heads or subside. Obviously, the war in Ukraine potential escalation there, weighing heavily on markets and investors. And the biggest issue out there right now are the treasury yields. Right now, the treasury yields are just at record highs, and the benchmark 10-year is reached 4.1886%. And that's the highest level since 2008. And we all know what happened back in 2008. Again, we'll take a look at that in a minute. But as long as official policy is to make the stock market go down so that people are less wealthy, so that they buy fewer things, so that prices stop going up, all while doing nothing about fiscal policy, we believe the correct posture is to be bearish on stocks and bullish on inflation. That was Greenlight Capital's David Ihorn talking earlier. And that's kind of what the Fed wants, right? They want to destroy demand. They want people to feel less wealthy, so they'll stop spending so that prices can come back down, because housing prices were very distorted, out of control. Asset prices have been distorted, out of control with the easy money, zero interest rate. It's just, that's what it's been doing to asset prices. It's overinflating them and has been attacking, those valuations ever since rates reached that really effective zero rate, back after the pandemic. So the other thing is fiscal policy. So with the government, handing money out still, there's still stimulus checks out there for people. There's still stimulus funds going out. And, with the Inflation Reduction Act, which should be the inflationary, inflating, contributing act. As we know, any government spending increases inflation. And, so you got fiscal policy at odds with monetary policy, and the Fed and the federal government are kind of butting heads on that. The government wants to spend while the Fed wants to tighten. Any money pumped into the economy by the government is inflationary. So that's kind of where that is when it comes to monetary policy. The other thing to watch is the altcoin market. So here's Ethereum kind of continuing on its trek after the merge pump. It's been just unwinding ever since. XRP up on good potential news with the lawsuit, but again, coming back down. And that's kind of XRP story, right? It's kind of pump and dump based on what's going on with the lawsuit. Cardano has broken that last May-June low, and this could be a bad sign for the altcoin and crypto markets. Altcoins could drop another 90% from here, and a lot of people just don't think that's possible or think that's crazy, but you have to look at where these things came from. So Cardano was 90% below where we are right now. Where Cardano is right now is back where it was before this big run up. So, altcoins can, Bitcoin can easily drop 50% or more from where it's at right now. In fact, let's just take a look at Bitcoin. We talked about 50% the other day, but if Bitcoin were to drop back to, that pandemic low level, that would be 70% below where it's at today. And then the 2018, 2019 low was 82% below where it's at today. So to think or believe that Bitcoin and cryptocurrencies can't drop another 50, 60, 80% from here, just look at where they came from. And they're kind of working their way back to these levels. There's nothing that says they have to hold up to these pre-all-time high levels. When you see your consolidation before the big bull run, this is Ethereum, was right in these areas where Ethereum was 100, back around $100. It's $1,200 now. How far down would that be for Ethereum from where it's at right now? That'd be 91%. Same thing with XRP, same thing with Cardano. Solana, here is Solana right here, kind of hanging into this little area here after its initial bull run after the pandemic injection of capital. And if we look at what that would be on Solana, that would get back, 90%, get you back to where you were before all this started. So, the altcoin market could be working its way back down to these pre-pandemic lows where they started from before all of the big bull run happened, before that last all-time high that we saw in everything, financial markets, real estate, cryptocurrencies, altcoins. So to think that that can't happen, or to think that it's out of the possibility, you just have to look at where these prices came from before the $2 trillion zero interest rate injection from the Fed and Treasury that caused all of this momentum right here. And the other thing to look at is the price action. if you look at the price action here on cryptocurrency and Bitcoin, they all look pretty much the same, pretty much identical price action. So let's take a look at where some of the stocks are right now. So if you go to stocks and take a look at Twitter, Twitter's had a little bit of pump action here lately, but let's look at a couple of the other ones like MicroStrategy. MicroStrategy's got kind of the same exact price action because, basically a Bitcoin proxy, right? Coinbase, same kind of price action as a cryptocurrency. AMC, the big AMC meme coin, same kind of price action like a Cardano, right? Just kind of unwinding all these big moves that we've had. Tesla, same thing. Tesla's been a little bit more volatile, but look where Tesla came from. This was the stock that I tweeted about the other day that outperformed Bitcoin by a mile. Tesla had a 1,600% pop in the 2020 bull run after the March 2020 low. Bitcoin ran 16%. So that was a big move for Bitcoin. And Tesla was the other one that just outpaced it. There might be a couple other stocks that did better than that. Obviously, AMC did well above that, but just for a short period of time, not for the length of time, but just for fun. Let's take a look at what that AMC, if you remember that. I remember when this was happening back during the pandemic, that was a 3,400%, 3,500% run up in AMC stock. It went from basically $1.16 all the way up to 44 bucks, and now it's unwinding that whole move. So you just have to know where things came from and where we are now. This is institutional capital that's in a lot of these cryptos right now. It's algorithmic trading, a lot of formulas at work. If this, then that kind of scenarios with programmatic trading operations. And when you see the exact same price action happening, let's even break it down on the hourly. Here's Bitcoin on the hourly here last couple of days. Let's look at Ethereum. Let's look at XRP at its level. Let's look at Cardano. Dropping. Cardano is the weakest right now, but Solana's right behind it. Matic kind of hanging on a little bit. DOT. Pretty much the same kind of price action, but some of these ones that are surprising a lot of people, Avalanche, Cardano, Solana, are showing serious weakness. And that could be a leading indicator of where things are heading for Bitcoin and cryptocurrencies here in the near term. So these are the things that I'm looking at. I will see you on the next video.